you, I want to make a brief explanation on how to trade support and resistance. Okay. Sometimes when you are trading support and resistance, there are some things that you need to observe. Okay. First thing I will first say that if you want to trade support and resistance, you must consider the previous trend. If the previous trend is a downtrend, okay, or if the previous trend is an uptrend, that is the first thing you must first consider or you must first observe. Then the second thing is the area where the market reverse. For instance, if the market is dropping down like this is the area the market, this is the level the market reverse. Okay, sometimes the market might still visit that same level and reverse. Sometimes the market might visit that same level and reverse, which means this is an area of value because support here become resistance and again still become resistance. Okay, the next thing that you need to consider again after trend, then area of value, then the next one is the candlestick pattern. Okay, sometimes you see a candlestick pattern appears from this support that's supposed to become a resistance. For instance, candlestick pattern like a spinning top candlestick, a hammer candlestick, um, a doji candlestick. All these are reversal sign candlestick. Okay, so you must first observe which type of candlestick that appears at this level. Sometimes you see a candle, a random candle that just appear at the level, but you don't know what to do. So the next one is rejection. Sometimes you see a rejection. If the market approaches support or resistance, you see a rejection. You must wait for rejection. Okay, that let me say there are 60% chances the market reach the resistance without rejection and reverse. Okay, so I prefer you trade when you see a rejection. Okay, then the next one is the gap. Okay, sometimes you place your trade, you draw a lines or you draw your area of value and see the price approach the area of value, the candle approach the area of value. You know, when the price approach the area of value, you expected to go with sellers, right? And unfortunately the candle gap down, the market still form green or the market still form red, or the candle gap up, it form green or form red. Okay, there are so many reasons why the candle will form red or form green. You must observe the previous trend. Okay, then the last one I would say is your entry level. Your entry level is very much important. Okay, now let's discuss what we mean by support and resistance. When we're talking about support and resistance, it is one of the most powerful pillar in trading, and most strategy have some type of support and resistance analysis built in them. Okay, be any strategy you are trading on, support and resistance must be built in them. Okay, support and resistance tend to develop around key area that price has regularly approached and rebounded thereafter. Okay, key area of value. Okay, now let's go to the chart. Let me explain what we mean by key area of value. Now you see this market now. These are key area of value. So you might be wondering, how will I be able to draw resistance, support, and resistance here? It's very simple. Okay, look at the chart now. You want to draw support and resistance. What do you observe? What can you observe here? You see the price reach this level, then reverse to the downside. Again here, reverse. Then you see rejections. You can see rejection. You see the candle also reject. Then the price create a fake breakout and still reverse. Here again, the market see try to reach the level, reverse, reverse, and rejection. Which means from this point is my resistance level. Okay, from this point here is my resistance level. So in that case, this is my resistance area. This is my resistance area. So now you can see now let's say you want to use the line to draw support and resistance area. Okay, either you choose the two lines or use the one line. Okay, for instance, if you want to draw area of value, you choose the two lines. Okay, just as many touch. Okay, place the line where the candle touch many times. Okay, for instance, we have a touch here, the market reverse to downside. We have touch, reverse, rejection, reverse, rejection, reverse, rejection. Even the price still went up and still reverse. The price closed below or move down below the level. Again here, rejection or let's say reversal, reverse, reversal, reverse, rejection, reverse. That is our key area of resistance. Now, the question again is how can I draw support area? First, check on this level. When the price reaches resistance, reverse to the downside. So, which means our support is right here. Okay. So now, what do we see here? When the price reach this point, we have a rejection hammer candlestick. The market reverse to the upside. We have a huge rejection. The market reverse to the upside. Though the candle close below but still reverse. Here again the candle close inside and still reverse. Here almost reversed but not enough. Then the price went down. So you can see when the price approach the level, the candle break but still reverse. Then at this area we now have consolidation. We have consolidation. Okay, from that same level. So as we have consolidation, because this is a support, a support, a support, here we have a false breakout, and here we have a consolidation. So the market decided to go down. See what happened next. Sellers enter very strongly and push the price down. You can see from this resistance, from this level. Don't be worried about this candlestick here. When the price reaches level, then the price went down and then reverse, and here we have a consolidation from that level, the market still go down. Okay, so now one thing you should know that anytime I like to trade support and resistance, I always prefer a market like this. I prefer trading a market that I can easily spot the significant support or resistance, not a trendy market. Let me show you some trendy market where it's not easy to spot support and resistance. Yeah, this is a trendy market. See the market is still dropping to the downside, so it's not easy to spot a support and resistance trade here. So all you have to do is wait for some consolidations, something like this, that you can easily trade your support and resistance. You can see it's not easy to trade support and resistance, because if you think the price is this is a resistance, right? This is also a resistance, and we expect the price to reverse the third time, though we have a bullish movement, then the price break the level. So now we have a retracement become a support, and the price, and then the market is now going down. So this is sometimes more easy to analyze when you are trading support and resistance. Now how do you draw a resistance here? Okay, so this is how you draw a resistance. Then according to the price movement, we can see a bullish movement. Okay, we can see a bullish movement. The trend is still uptrend. Here we have a resistance, the price break the resistance becomes support. Here is again it's trying to become support. Here we have the support, and then this is support level. So if you want to trade support and resistance, you must not choose uh, a trendy market. Try to choose market that you can easily identify significant support and resistance. Okay. Now, next one is after you find the significant support and resistance, you find a candlestick pattern. This candlestick pattern will tells you the information of how you're going to predict the next market direction. Okay, for instance, let's go to here. Okay, now let's say this is a resistance here. So where is the candlestick pattern we can trade on here? After we draw these two lines as support and resistance, okay, these two reversal point as support and resistance, here we have a huge rejection from sellers after touching the support and resistance. You can see And how did the candle close? The candle closed as um, a bearish reversal candlestick. Okay, a shooting star candlestick from the resistance. So what happened next? The next candle was a red. Okay, now when the price approached the resistance again, this is not a sign of reversal. This is also not a sign of reversal. But what do we see at that same level? We can identify a sign of reversal as a bearish engulfing pattern. A bearish engulfing pattern as a sign of reversal. So what happened next? The next candle was red. Okay, when the price touched the level again, a huge rejection. No, that is not what we are looking for. Here, this candle break and the market went down again. Here again, and okay, now what do you observe again from that same resistance? Evening star pattern. Okay, evening star pattern from that resistance. The next candle was red. A Mariposa candle from that resistance. The next candle was red. Okay, a shooting star from that resistance. The next candle was red. You can see it's very easy to trade candlestick pattern when you are trading support and resistance. So that is first thing you must first observe. That is next thing you must observe when you are trading support and resistance. Okay, this is not a reversal sign. This is not a reversal sign, but combining these two candlesticks is a sign of reversal. Okay, this is much like a sign of reversal, but let me say it's not really a sign of reversal. It looks like spinning top, but it's not really much a sign of reversal. But if you combine the two candlestick pattern, it gives you a sign of reversal. That is a bearish engulfing. Next candle was red. Okay, yeah, this is not a sign of reversal. Okay, this is a sign of reversal. A spinning top candle. A spinning top candle is a sign of reversal. But if you are not satisfied with this sign of reversal, then you combine the three candles together. That will give you an evening star pattern. Okay, give you evening star pattern. This candle and this candle and this candle give you evening star pattern. This is not a sign of reversal. Well, you can say Mariposa sometimes reverse the market after closing above a resistance, but I would say it's not really a sign of reversal. Okay, but this is a sign of reversal, a shooting star candle. So the next market went down. Now let's discuss about the support. This is a support. First, we draw the support level here. Okay, from the support we can see the buyer's candle, a hammer candlestick. The price went up. Here no sign of reversal. Here no sign of reversal. Here a rejection, a huge rejection, a pin bar. The next candle was green. Okay, and here this is not a sign of reversal. This is not a sign of reversal. But if you combine the three candles together, it gives you a morning star pattern. A morning star pattern. After a morning star pattern, we see the next candle was green. Okay, this is not a sign of reversal. This is also sometimes, let's say, a small inverted hammer, a sign of reversal, but we are not satisfied with it. But this is a sign of reversal. So either you choose this as the sign of reversal or this. You can see the next candle was still a green candle. A Marbozu, like I said, sometimes reverse, sometimes doesn't reverse. So we are not sure. That is why the buyers really try to enter buffet and the market keep pushing downside. Now, let's check on the right side. Let's see what happened next. See the price approached the level, no sign of reversal, and we have a consolidation, okay, consolidation, then price break the consolidation level. The next candle was red. That is why sellers keep pushing the price downwards. So now let's see one more example. Okay, now look at this level here. Resistance, no sign of reversal. Here we have a sign of reversal or a Marbozo, a shaving bottom candle, and the price went up. Here we can say this is sign of reversal, but I'm not satisfied with this sign of reversal. Okay, I'm not satisfied with this. Reason why? Because if I want to go with a bias on the next candle here, we can expect this candle to have a small upper rejection. Okay, though we didn't have enough trend. Okay, and this is not a sign of reversal. This is not a sign of reversal. Here again, this is not a sign of reversal. No sign of reversal. I think the market is still in a consolidation mode. The market is still in a consolidation mode, still at the level because this is a resistance becomes support, and now it's trying to become support. Let's see where the market will reverse. Uh, okay, okay. Now this is still a support level. Okay, this is still a support level. So from the support level, what can we find here? A spinning top candle. So what do we expect next to happen? We expect a green candle. Okay, we expect a green candle because we can see this is a area of value, resistance, support, and then we have some consolidations. We have some consolidation. Let's see if the buyers will enter on next candle, because here I can say this is a sign of reversal, but let's see if the buyers will really enter on the next candle. Okay, it seems there's no sign of buyers. Since there's no sign of buyers, the market has really violated this level, and then the price is going down. Okay, because we have so many consolidation here, the price decided to go down, not reverse to the upside. Okay, okay, because this candle is indecision. This candle is indecision. Either the price will reverse to the upside or it reverse to the downside. After either upside or reverse to the downside. That is what this candle means. A spinning top candle. Now, what do we have here? A sign of reversal. The candle did not reverse. Finally, we have a strong green candle. Okay. Okay, now, what do we have here now? We can see, okay, no sign of buyers and no sign of sellers. It's a gravestone doji, no sign of buyers, no sign of sellers. So what we expect next is if this candle will close as green, the next candle should become a green candle because that will give us a doji, money doji pattern. Okay, morning star doji pattern. If this candle will close as a strong green, that will give us a money doji candlestick pattern. Okay, like combining this candlestick and this candlestick, and if this candle close as green, a strong one, then we combine the three candles as a morning star doji pattern. So after a morning star doji pattern, I'm expecting next candle to be green. Let's see. Well, not enough. Okay, not enough bias. Okay, this is not enough bias. I was expecting a strong green candle, but the bias candle is not enough. You can see the price is still going down because there was no sign of strong bullish candlestick. So now back to, okay, now support is an area on the chart that price has dropped but struggle. I have explained that. Same thing with resistance. Now this is example of drawing support and resistance. Okay, we have this area, we have this, we have this, we have this. You can see anytime the price reach that level, it reverse. Okay, you might be wondering why did I even place the line here? Because when I see the price approach the level, it reverse. So that will give us what is going to happen in the future whenever the price reach that level. So which means even though the first thing I will first consider is that if I draw the first line, I will look for the next point where the price reach and reverse, which is the second line. Then I'll wait for the third time the price to reach the level, or the fourth or the fifth. Okay, sometimes that is how I trade support and resistance. Okay, that is how to trade support and resistance in a ranging market. Same thing here. This is support and resistance. Okay, now on the left side, this is the first attempt, this bullish movement. Okay, second attempt. When price reach the third time, it reverse. Yeah, finally break, but it still reverse to the upside. Okay, breakout strategy. Sometimes you use support and resistance to trade breakout strategy. Okay, so this is how you trade breakout strategy. We have support area. Then we have this kind of break the support area. When price retrace back or pull back, we have some reversal sign and the market reverse. So this is a breakout candle. When the price pull back, what do we see? A spinning top candle. The next candle reverse to the downside. That is how you trade breakout strategy. So now, what is breakout strategy? It is often the case thereafter a period of directional uncertainty that price will break out and begin trading. So trader often look for such breakout below support or above resistance in order to capitalize on further increasing momentum in one direction. If this momentum is strong enough, it will have the potential to start a new trend. However, in an attempt to avoid falling into the trap of trading false breakout, top traders tend to wait for pullback. Okay, that is why I strongly advise when you are trading pullback or breakout, you must wait for pullback towards support or resistance before committing to a trade. For example, the chart below, something like this, okay, show a strong level of support before sellers push the price down below. Many traders might get carried away and rush to place a short trade prematurely. But instead, traders should wait for a response, for the response in the market, which is some buyers' attempt to gain control, to break down before executing a short trade. Okay, okay. Some trader decided to take trade here, and you can see what happened. Though the market might still go down, sometimes you see a green candle, but you must wait some for some buyers approach to see how the buyers will react when the price reach the level. But see the price buyers did reverse or react when the price reach the level. And what do we see here? A spinning top, a sign of reversal. The next candle reverse to the downside. So that is sometimes that is how you trade support and resistance. Okay, you trading breakout. Now, trend line strategy. A trend line strategy utilizes the trend line as either support or resistance. Simply draw a line connecting two or more high in a downtrend or two or more low in an uptrend. In a strong trend, price will bounce off the trend line and continue to move in the direction of the trend. Therefore, traders should only be looking for entries in the direction of the trend for higher probability trades. This is an example. Okay, you can see a trend line resistance. Now let's go to the chart. Let's draw some trend line resistance. Let me show you how to draw some trend line resistance. You see the market is going down to the downside here. If you want to draw trend line resistance, connect the high of the market. Okay, so sometimes after we have the first touch, second touch, see the price reach the level, reject, the market went down. That is for resistance. Let's check one more example. Okay, here, 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 you can see here and here. Finally, price break the level and then push upside. That is how to draw trend line resistance. Same thing, you can draw the same on support resistance. Okay, so now using moving average to draw support and resistance. Okay, let's say moving average can double up a dynamic support and resistance. Popularly, moving average to include a 20 and 50 period moving average. From the chart below, it is clear to see that the 50 EMA initially track above the market as a line of support, like this. This is the 50 period EMA. Okay, the market then bottom and reverse, and then the 50 EMA then become dynamic level of resistance. So trader can use this trend line to make informed decision about markets likely to continue trending and those susceptible to a breakout, something like this. You can see we have support, 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 and finally breakout, become resistance, resistance, resistance. So sometimes it's very easy to track trading support and resistance, and you must understand the market behavior, the psychology behind trading support and resistance. The next one which I want to discuss is the Fibonacci retracement and support and resistance. So Fibonacci retracement are considered to be hidden level of support and resistance in the market. They are derived from the Fibonacci sequence of number that was discovered by Leonardo of Pisa, a 13th century Italian mathematician. So Fibonacci retracement are internal retracements since they measure the price movement that exists within a period leg. So the most common Fibonacci retracement level include 23.6, 38.2, 50, 61.8, and 78.6 level. So for instance, let me discuss about the trend line. Okay, the moving average. I'm going to select the 50 EMA, 22 EMA. Okay, you see, when the price is going down, after that the price finally break becomes support. So sometimes the EMA doesn't align very well with the price movement. All you have to do is observe or you trade the appropriate EMA. For instance, something like this. Okay, but if you see sometimes the price break the EMA even without first touch or without first attempt, you avoid something like that. Okay, this is the first time, second time, third time, and finally break. Okay, but when you are trading EMA, it's just when the first attempt at the support, maybe resistance, the price break, do not trade. Okay, but make sure that the first attempt was the resistance. So if the second attempt the price touch, you can trade. But if the second attempt they break the EMA to the upside, don't trade. You can see after the price move in between the price, after the moving average is moving in between the uh price action here, we are finally have a break to the upside, to the downside. So now, where's the first attempt? No first attempt, no second attempt. Here we have the first attempt, but finally price break. So it is better for you not to trade the first attempt. But make sure that it has touched at least one attempt, the first attempt, then you can trade the second attempt. Okay, if the first attempt break, don't trade. Just like this, after the price break to the ups to downside, first attempt, here no second attempt, the price break and consolidate. Okay, after break to the upside to the downside, the first attempt resistance, here second attempt. Now you can trade the third attempt. Okay, that is how you trade support and resistance using the moving average. So now let's talk about the Fibonacci sequence, Fibonacci retracement, how to trade support and resistance using Fibonacci retracement. For instance, if I draw the high to the low, so when the price reached the 23.6, it crossed the 23.6, it crossed, almost touched the 30.2, then 50th level, no, 61.8 level, we have some rejection. At the 50th level, we have some price rejection. But finally, after we have a rejection from the 61.8 level, the market went down. Okay, so here we have the A, B, then you look for C at any of these Fibonacci level. Now, let's say if you want to trade Fibonacci level, which number is very more strong, is very more, let's say, is more reliable to trade Fibonacci level? I'll first say do not trade 33.6. Sometimes it's not strong enough. So, but you can trade starting from 30.2 to 61.8 level. These are the number that you can easily trade the Fibonacci retracement. Okay, but if the price reverse and touch 20.6, sometimes it doesn't respect and sometimes it respects. So I will recommend you guys to trade from 30.2 to 61.8. Okay, now same thing here. I'll adjust my line to this high and to this low. So where do we have, what do we have here? 23.6. Yes, we have a rejection. Like I said, the market doesn't reverse. Then 30.2. Nope. 50th level. Nope. Then 61.8. Yes. Okay. 61.8 also correspond with the trend line also. Okay. Correspond with the trend line. Same thing here. The first one, the first reversal which happened here, which occurred here. You can see the price touched the trend line and still reversed to the downside. This is how you trade support and resistance using the trend line, using the Fibonacci retracement. Now, same thing here. Okay, from A to B, then C 61.8 touch the trend line and still reverse. A to B, then C 61.8 also correspond with the trend line, the market reverse. So if you want to trade Fibonacci, you must find a trendy market, not a ranging market. Don't trade ranging market if you want to trade Fibonacci. A ranging market like uh, like this. Don't trade if you want to use Fibonacci. Don't use Fibonacci in a trade ranging market like this. So it's not proper to trade. It's not right to trade Fibonacci on a ranging market. So now, how do you draw Fibonacci in this kind of situation here? Let's say the first attempt is here and here. So from 50th level, we have rejection, the market reverse to the upside. Okay, that is from the 50th level, the market make a strong reversal. Now, let's move the line to this level and here. Okay, so again, the price touched the 61.8 level, 61.8 level. Okay, so let's move the line. Okay, see it's 1.8 level, but the market doesn't reverse. and it's finally reversed to the upside. Now, the price again is touching the trend line, but that's not how we're going to draw it. So let's say from here and here. So from 50th level, we can expect some bullish candle here. Also 61.8 level. Either you place it here or place it here. So it is still the same. 50th level here is 61.8 level, but if I adjust the line to this level, it's still 50th level. So now we can expect some bullish trend here. So that is how you trade support and resistance using Fibonacci retracements. Example like this. Okay, so that is how you trade support and resistance using Fibonacci retracement. So this is how sometimes I trade support and resistance using Fibonacci retracement. So you must observe the trend, the area of value, candlestick pattern, a gap in the market, and your entry. Your entry is very much important. Okay, sometimes even though you predict a candlestick and the candlestick doesn't form, the for instance, if I decide to go with buyers, for instance, this is a level. If I decide to go with buyers, sometimes I will be expecting a bullish candle. But if the candle doesn't form a bullish candle and it form a red with a huge rejection, whereby my entry is here, so I'm okay with that. Okay, I'm still okay with that. Something like this. If I decide to go with buyers here, my entry is here, and the candle close above my entry, well, I'm okay with that for the price to still reverse to the upside and close above my entry. So sometimes when you are trading support and resistance or trading the binary option, should not be 100% sure the market is going to reverse according to your uh, trading plan. Okay, that is why entry is very much important. Even though you don't analyze the candlestick properly, your entry point is very much important. So there are different ways when you want to trade support and resistance. Choose different market condition. For instance, if you want to trade support and resistance in a ranging market, you choose a ranging market. If you want to trade support and resistance um, using the breakout, you must. These breakouts can be in two ways. Either you trade ranging or trendy market. Okay, that is how you trade support and resistance using the breakout strategy. Then, if you want to trade support and resistance in the trending market, you must choose also a trending market, like using a trend line. Okay, this is a trending market. Okay, use a trend line, not a ranging market. Using moving average. Sometimes, if you want to trade support and resistance using moving average, the market must be trendy, right? The market must be trendy. And if you want to trade support and resistance using Fibonacci, the market also must be trendy, not ranging. Don't trade ranging markets. Don't trade ranging if the market is. Don't trade support and resistance if the market is ranging. Okay. You can see the price reached the 61.8 level, touched the trend line also, and still reverse to the upside. Okay. This is a very simple way to trade support and resistance using the trend line, using the Fibonacci, using the moving average. Okay. So that is how you trade support and resistance. Okay, so I hope you guys understand how to trade support and resistance. So if you want to trade support and resistance, you must follow these rules I mentioned earlier some minutes ago. Okay, first thing, the trend. If the market is downtrend and uptrend, or second one is the candlestick pattern, area of value, gap, and your entry point. These are very much important when you are trading support and resistance. So without this, you can't trade support and resistance in a proper way. Okay, guys, see you in my next video. In my next video, I'm going to show you how to trade with simple candlestick psychology, simple candlestick psychology. Okay, guys, see you in my next video. Bye bye. And if you like my video, like, share, and subscribe. Thank you.